Let's start with a review of the financial statements. The first statement we talked about was the income statement. On the income statement, we have revenue, which is earned by delivering goods or services, minus our expenses, which are the costs of doing business, equals net income if revenue is greater than expenses. The balance sheet has assets, which are equal to liabilities plus owner's equity. Assets are the resources owned by a business. Liabilities are claims against those assets. And owner's equity is the residual claim on total assets. Let's review what an asset is. Assets are the resources owned by the business. We have current assets, such as cash, short-term investments, accounts receivable, and inventory. Long-term investments, which are securities or other assets not used in current operations. Property, plant, and equipment. Examples include building, land, and accumulated depreciation. We have intangibles, those assets that lack physical substance, such as goodwill, a copyright, a patent, or a trademark. If the asset doesn't fit in the first four categories, we consider it an other asset. Next on the balance sheet, we have our liabilities. A current liability is due within 1 year of the balance sheet date. Examples include accounts payable, salaries payable, taxes payable, and other short-term borrowings. If the liability is due after 1 year, it is considered a long-term liability. Examples include long-term notes payable and mortgage payable. The final category on the balance sheet is our equity, or the ownership interest in the company. Under owner's equity, we have the owner capital, the amount the owner invested in the business, and an owner withdrawal, which is the amount the owner has withdrawn from the business. When we look at owner's equity, it is increased by the revenue that the business generates, and it is decreased by any expenses that the business may have. Based on the slides we just went over, you will now need to complete the matching activity found in your online activities section. When we look at this online activity, we are going to look at 21 different accounts, and you need to determine whether or not each account is an asset, a liability, or equity.